All right, so thanks for joining me. Today we're going to take a look at 5 different ways to buy a stock as it dips or starts to move down, kind of catch a falling knife, but I'll share with you just general concepts here. If you want to see some option trades, check out the Traders Fly channel for that. Okay, let's get started. We're going to go ahead and take a look at this. Definitely, if you want to work with me and get some more insight, especially one-on-one stuff, go to the tradersfly.com website, grab a one-on-one video coaching session, or if you really want to work together for like 3 to 6 months on individual option strategies, you can check that out in the coaching and mentoring section there. All right, let's take a look at some of the charts and diagrams here. I'll be sharing with you some of the stuff that I post also on Discord here throughout, and you'll see some of these descending trend lines. So let's pretend a stock is kind of coming down in this downward direction. So as we start looking at that, what you'll see here is there's going to be 5 ways to buy the dip. So as the stock is trending on the downward path, there's the first way that we're going to look at is kind of, let's go in, and as we're going in here, we're buying the dip. Now, when you do this, you have to have a long enough time frame, let's say a 6-month to 12-month time frame, to be able to add 10 shares, 10 shares, 10 shares, and so on. What people do is they go in and let's say they go into 100 shares and then they're like fully allocated and they can't continue to add. So when you're buying this dip, you have to think about each month you might be adding, so you spread your price risk in different zones and sections. So this is kind of buy as you go as you dip down, because you're catching a fall knife, but you have to buy in tiny, tiny increments when you do this. So think tiny, so that way you can sustain over the next 6 to 12 months, and eventually you're looking for, by then, the stock to pop or go higher. Okay, so number 2 here is you're drawing a descending trend line on the downward, and now you've got resistance that you're hitting at different points. Really, it's actually a channel if you draw another line on this downward segment. But then what you're looking for is kind of right here, where number 2, you're breaking this descending trend line. So this is a break and the descending trend line, and this is your next entry point, where you could wait a day or 2 for it to really clear, and that could also work out just fine as long as the stock keeps going. Sometimes you'll get little pops above that resistance level and rolls over, so that's why it's nice to have a follow-through day or 2, okay? Number 3 is actually, after the stock comes up, it's going to probably come back and retest certain levels. So I'll go ahead and draw another color for that. So you're going to look for some support or resistance here, and then you're going to go in right here where it's starting to go ahead and break again. So either on the bounce, okay, so this could be number 3 here, or a break on this descending level right there. Okay, so there's your 3 and kind of 4 right there. Okay, so it's coming back. You're looking for a bounce. So the first one is as it's bouncing. The second is as it's clearing kind of this downward level. Okay, and number 5 is going to be a break above the high here. Okay, so you'll have number 5 right there. So as it breaks that high over there, that's another way to go ahead and kind of buy the dip. So you have kind of the safest play. Okay, safest is kind of over there, whereas more aggressive traders are going to be early on. So it just depends on, like, look, do you want to be more aggressive or do you want to be more safe? The safer you are, then you have kind of less range left over. The more aggressive you are, you have more risk that this stock could continue to move down, but you're getting things in earlier. So in other words, number 1, as it's trending down, you could go ahead and buy kind of the dip and slowly average into it, unless you're doing something like with a vertical spread. Number 2 is a break of this descending trend line. Number 3 is as it pulls back and bounces. Number 4, watch this descending trend line, and then a break right there. And number 5, a break above the high or resistance of the past after it's already broken. So those are kind of the levels. And that's kind of something you may want to take a look at. So if you're looking at kind of any stock chart and you're watching this, you might see different stocks that have traded or trended in a downward. There's different ways to kind of spot these things. And I'll just show you one quick example here. Again, I'm just pulling this one off the cuff right here. So let's say the stock is trending down. Okay, so you could go ahead and take a look at this right here. And we're going in and descending. So I could start buying the dips or buying or nibbling at these different points, but I'd only nibble here, the nibble, then the next one coming in, nibbling, and I'm buying the dip and nibbling and nibbling. That's kind of number one. Number two is wait for the clearance of this. So that would be kind of number two. Number three is, look, it's coming in right here and then rejecting. So now I'm looking for this test. There it is, buying on the dip here. Okay. Next one would be right here when it clears that. And then the final one would be kind of a clearance of this right here. And you'll see sometimes they dip below and then it kind of goes back up to the upside. So sometimes it gets stopped out once or twice, and then eventually by the third time, it may pan out and work out. So that's kind of a way to look at it for all the different levels. And it may take a whole month of, hey, which one is going to work out better for you? It really just depends. Do you want to be more aggressive, more safe? But you can see all those different areas that you can go in and get into a stock and in buying the dip. Obviously, the earlier you go, catch a falling knife, more aggressive, but you got to have enough capital to do it for a longer period of time. So make sure you buy those dips slower. Whereas if you're catching it later down the road, you might need to be more aggressive because you might not have enough range or room, or you just didn't get it as early as maybe some other people, or get into as early in the trade. So anyway, I hope that helps. Thank you so much for joining me. Feel free to subscribe to the YouTube channel if you're brand new, and definitely book a one-on-one coaching session or mentoring session if you want to go ahead and work for a couple weeks or months together. So I'll see you there in the next video, episode, or maybe a class. Take care.